Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again in the forex market. So actually guys, from the technical point of view, there's a few things to discuss. Mostly we're starting the new trading week at the same point where we have finished the previous one. Speaking about the larger scale, we could say that on the monthly chart we have potentially grabber in July, and it's just a free session until the end of the month, so a high degree of the probability we should get it. So but fortunately or unfortunately, but this grabber actually has a relatively close target, so it doesn't suggest challenging of the 114 area or even 112. Its target stands at 110, right at this top, because if you'll take a look at the monthly chart, this is the previous nearest top to the left, and as you know, the minimum grabber target is extreme point that stands nearest to the grabber itself. So from that standpoint of view, we could not get that upward action really to high extension, so it might be just minor upward continuation to 111 area, 110.50, and at this point upward action might be over. So we will see what will happen, because today in the fundamental report we have come to a bit surprising and stunning conclusion that actually the Fed policy might change really drastically by the early fall or late summer. Maybe something will be done on the Wyoming meeting in Jackson Hole. As you know, it's a very important meeting, although no rate decision usually made there. And some really big strategical questions could be discussed, and keeping it simple, the Fed right now is coming to the lack of the reserves. So liquidity that was on the market right now totally consumed, and actually the Fed and the United States Treasury have no free funds. At the same time, for Democrats to win the election, or at least to prepare the background for victory, they vitally need to hold markets stable, to not let market to fall, as in debt market, as in stock market. And to do this, they need reserves. That's why it's very probable, and also some political background exists for this conclusion. So we haven't discussed today the politics. Maybe some words we will say tomorrow on the gold report. But in general, political background also exists for this conclusion. But actually they have actually no option. They no choice. They will have to start printing money in a way of the quantitative easing, or some other way it will be, or maybe it will be some hidden emission you could see only in the statistics on the Fed account. Money supply changing. Maybe they will not be publicly introduced, but anyway, they have no choice but start printing money again to stimulate consumption, to hold markets, and so on. So that could make the vital impact on the performance of the euro currency. So cutting of the rate from the Fed, and until inflation will spinning up again, euro should keep positive mood, especially as we expect that there will be no rate cut from the European Central Bank in September. So from that standpoint of view, market have 1-2 months euro currency to stay on the surface, or even to show slightly upward continuation. And the grabbers that we have on the monthly chart in general confirms this. At the same time, we have the bearish grabber on the quarterly chart of the euro currency. And that grabber mostly stands in relation to the conclusions that we have made in longer perspective. By our opinion, the Democrats will keep markets and do everything to stabilize economy, even with the emission, until the elections. So after that, the burden will be put on the new president, and actually it absolutely doesn't matter what they will do with this luggage, but until this moment market will be more or less stable. But later on, when the inflation starts rising again, the first market reaction, as you know, will be in favor of United States dollar, because if inflation rising, it means higher rates, it means demand for United States dollar and dollar denominated assets, right? So and the grabber that we have on the quarterly chart is perfectly fits to this logic. We will see. Meantime, in the shorter term, as I said, we're starting the week at the same points. If you take a look at the daily chart, and you also could see it on the Great British Pound, the background for starting of the Brent body is ready. We have rust, we have drop below the 3x3, and reaching major 30% support. So this is enough to show the more or less significant bounce, or even to reestablish upper direction. But trick stands in details. So if you take a look at the fall time frame chart, you will not see here any bullish signs. In fact, we have even the completion of the ABCD, and normally bullish market shows more evident signs of the reversal in the current circumstances. So strong confidence support, completed ABCD, Brent body trade on a daily chart, strong natural support resistance area with this. You can see tops. But what we have instead, sideways action with the grabber on the top, shape of the flag, and signs of the bearish dynamic pressure, because we have bullish trend, but my market mostly stands flat. On the hourly chart, despite that we even have got chance to take the position here, and later on you can see it's also another triple two has been formed, overall price action looks not very attractive. Choppy, wobbling, unstable, a bit nervous. So in the current circumstances, this type of action usually very common for and typical for coming significant drop. So it very often precedes some significant drop, where later maybe market will change the direction, start forming something. But it seems that downside action is not over yet. Here's might be, for example, some wash and rinse of these lows, but something bearish might happen here with the challenging of the lows before everything will be done, and before market will start working with the Brent body and so on. So from that standpoint of view, maybe I'm wrong, but personally, I absolutely do not inspiring with the taking long position currently. I don't want to buy this kind of market, and I prefer to wait a bit more. You would even recognize here the hand shoulder shape. Yes, it's a bit choppy, it needs some imagination to recognize it, but theoretically you could do this. The right, so left shoulder, right shoulder, left shoulder, some kind of the head neckline here. But this type of action is not absolutely good for hand shoulders. This is price action, really good for hand shoulders. Fast acceleration on the slope of the bulls, downside acceleration for the bears, very small shoulder where bears control the market, and collapse. So everything just great with our previous trade. And here I prefer to wait. So that's my conclusion, and see what will happen in the beginning of the next week.